wasn't very good, but ultimately never thought it would come in so hard and hit us in crypto more than it hit the fiat markets. Ultimately, we take the brunt of it. Why? Because we're open 24/7. We cover all the fluctuations. But what I didn't understand is when it hits crypto, why crypto? Crypto is decentralized. We all have control of our own wallets. We should not feel the impact of this, right? And so it was really weird. Um, but anyway, we are back, and happy Tuesday, everybody. A different week. We had a Monday to recover, and here we are back on Tuesday, and everybody's a lot to cover today. We got lots to talk about. I'm just going straight into it. Why sort of, want to keep this tight and structured. But I hope you're all well out there. Let me know. But we went to war and the price of oil surged, and we all witnessed that and saw that. And not only did the price of oil surge, so did the. And so a lot of people were asking me, a couple of things happened, which actually I just want to sort of allude to, right? So I had a couple of calls on Friday that really sort of, that I did not expect. And it was a lot of people, wealth managers, high net worth, ultra high net worth individuals, as well as, yeah, successful entrepreneurs or successful tech um, team members or techpreneurs, not techpreneurs specifically, but actually tech participants that are now sort of, really comfortable, got a lot of money, trying to figure out what to do. And they were all asking me how to invest in Bitcoin. Where do I go? What do I do? How can I get in? Should I get an account with Coinbase? Should I buy Ledger or Trezor or other Bitbox? I'd never heard of Bitbox, but I went with Ledger because that's what I know how to use. And anyway, told them, so people wanted self-custody. They don't want ETFs. They don't want ETPs. They want to control their own money. So that was one thing. And then some of the people actually knew how to use wallets. They had wallets set up. They had accounts and exchanges set up. They wanted to get involved in that way. And ultimately have it on multiple different platforms so you can experience and maintain it on different platforms and have your exposure in different areas. Just keep track of it. Don't lose the 24 keywords or the 12 keywords, whichever you save. And I think everybody sort of knew that and had that, sort of impregnated into their brain. But three big individual, they were reaching out to me, and the only window I had was on Friday. So I had to do it on Friday. And so worked through all three of them. And then some of them actually put money, bought Nuon, staked Nuon, and actually got into it with USDC. So bridge to base and actually really got into it and had a wallet. Different challenges. You need gas fees on base. So man, got to get that going. How do we get that going, et cetera, et cetera. So that was pretty, interesting journey, fun, and a big learning, right? That all the meanwhile, we're going to war, we're shooting cannons and rockets and going deep into the ground, which ultimately led to the rise in oil prices, which you can see right here, and right here. And let me share my screen. I had it up, I took it away, and I'm putting it back up again. Let me know what you think about oil, right? Because the other thing I had is on the weekend, everybody's, oh, we should buy oil, we should buy oil. Why? Because the oil price shot up, right? And so on Monday, the oil price futures, and then on Monday went up. Everybody was asking me, should I buy oil? Should I buy oil? But, I don't know, man. Oil jumped up. I mean, bear in mind, and if you listen to the Thursday show, I was talking about China and how important the supply of oil from Iran to China. And we saw some shipping turning around, going back from China to collect the oil, but ultimately they weren't able to collect it due to the what was going on in. But the Hormuz Strait, which is that strait between Qatar and Iran, just blocked off. There was rumor that that was going to get shut down. Ultimately, didn't get shut down. Also, Europe's in the middle of rock, caught between a rock and a hard place. So I'm bang here and over there. Why? Because ultimately, Russia is their biggest source of energy in the past. And boom, the other supplier was Iran. So now Iran, or even if it wasn't from Iran or Russia, it was coming from India, which is going through the Hormuz Strait to get to Europe. And so, bang, ultimately, if the price goes up too high, also it's inflationary. So there's no interest on behalf of the Trump administration to have a growing oil price. Why? Because ultimately it has a huge impact on inflation. As we know, if you pay attention to these classes and our videos and all of our reports that we share with you around inflation, oil is a big driver to that, right? And so trying to keep it around $70. And you can see here, if you go, let me just get rid of this comparison. And so get rid of the comparison. I don't want it. Go. Delete, delete. Okay, clear. I go back to oil. You can see over here, I'll just go to the 1 month rate. This is the crude WTI West Texas index. So you saw here a huge spike in anticipation of the price, the rise, and bang, a huge drop again when it came down. And that was around the ceasefire, right? So will it stay down there, right? It's now $75. What's it down here? We're just below $75, $65. So good thing you didn't buy on the 23rd. Okay, that was yesterday. Where's it today? Don't know, but we can find out that. But what I do like and where I do think we have longer term energy requirements is around uranium. Why? Uranium has the highest Pareto rate. What is Pareto? Pareto is the conversion rate between raw material and energy, right? What is that conversion rate? So, one of the sources of energy is going to be in the future uranium. Nuclear power plants, it's just been deemed as energy friendly. I know Germany shut down their nuclear power plant development. China has 30 new pebble bed reactors that they've launched, right? So really modern nuclear reactors, or they're launching and they've been building and developing. The other element is we have, if you've paid attention to this show, we've been talking about small SMNRs, right? Small modular nuclear reactors, right? So you look at those elements. What does that mean? Every data center that's going to get built is going to have a nuclear reactor, an SMNR next to it. You can even have these, and we talked about Rolls-Royce building them and a couple of other companies that have now got these SMNRs, and they're building them right next to data centers. We saw Amazon do an investment in them. Microsoft did an investment in SMNR companies. So if you go and have a look at the track record and our previous shows, you will have seen and learned which companies are there that you may want to have a deeper research into and possibly take some equity in, or maybe not, but that's up to you. Do your own research. But yeah, I think uranium's come up. And if we compare this on an index level, you can see that uranium has way outperformed oil. Spike up here. When was this? This was January 26, 24. That might have been around one of these. What are they called? Anybody know what the name is? They have these green event called 26 COP 26 or COP 27. What was that? The COP something in Dubai. COP in Dubai 23 nuclear is now green. What was that? Here we go. COP28, the statement COP28 in Dubai. Um, COP28 in Dubai did not see significant recognition. Oops, maybe that was wrong. Conference did, however, declare that by over 20 countries, triple global nuclear power. Oops, maybe not one. Recognition of nuclear energy's role in COP28. There you go. Yeah, December 23, and that's why it saw that splurge. Yeah, here you go. So I'm just looking here in Google. You can see what I'm looking at here. Recognition of COP. So this was in December 23, 7th of December, because I remember I had a friend that was there, and they were in the renewable energy space, and they built it out on blockchain, so you can track the actual at source. They were tracking the carbon emit. They were tracking carbon emissions. All infra. Check them out. Either way, whoops, something going on. Is it all working here? Everything good? I hope so. If not, we're in trouble. Let me see what team's saying. No response from the team. I think we're all good. Oops, no, no, no. Yeah, here we go. Yeah. Yeah, so that's really around the COP28, but that's why sort of I do think uranium is interesting. And if you look at uranium, one of the things why uranium, right? We see AI. AI is really going to be consuming a shed load of new data requirements, and so here the IEA, International Energy Agency, they put a report together. By the way, don't download the report because you need to give all your KYC and details and takes 15 minutes, create a password, get a confirmation, collect in. It's crazy. But anyway, just for a report around global energy that is supposed to be from an NGO anyway. Anyway, here, global electricity demand from data centers is set to more than double over the next 5 years. Actually, it's shorter. We know that there's some 92 terawatts that is needed right away in the next 2 years. 2 years. That's 92 nuclear, full on nuclear power plants to feed the AI beast, right? And so global energy required more than double the next 5, consuming as much electricity by 2030 as the whole of Japan does today. The effects will be particularly strong in some countries. For example, the US, data centers are on course to account for almost half the growth in electricity demand. In Japan, more than half, and in Malaysia, as much as one fifth. So, I mean, it goes on, and it gives us numbers. I mean, you can just Google search the numbers and who are the big energy providers. So, let's go to the Global Conference on Energy and AI. Looks really old school and yeah, but here, who are their big sponsors? That's sort of what we want to see, and that's maybe how we find cool new companies, or we look for SMNR companies. Who is developing these SMNRs? Where are they? Which are the companies that Amazon invested into, and which are the companies that Microsoft invested to around the development of this stuff? So take a look at that. But why, we also launched, and we're seeing this Truflation AI index. So we launched the AI index, and you can see over time it's been recovering significantly. AI is back, topic du jour. Lots going on in this space. But just bear in mind, right? A lot of these companies are generating and raising significant amount of money. There are thousands and thousands of different companies raising money at megacorn, decacorn type valuations. Not all of them have proven their models. Some of them are going to be big stalwarts that are really going to make a big difference in the future and are really going to stand out in the future, right? And so that's really where we're at now. Will there be sufficient energy to help these companies survive and actually pull to fruition? Where will the energy get sucked in? Who is going to be buying and paying for the energy to feed this? Or will we be creative and innovate around this area? One of the key graphs is just looking at alternative sources of energy. Solar, right? Solar is a big um, access point of energy consumption or creation. And there's a really good podcast. Who was it? Jesse Poltron. Check out Jesse Poltron. He did a really good analogy. Where is energy growing? And I think I summarized it here, but I summarized it in a different context. And it's no longer here. Why not? Damn it. Damn it. Anyway, I lost it. Doesn't matter. But yeah, I mean, just check out our DEAI index. You can trade it. It's actually tradable on index.fund, but also on Limitless. So check out Limitless. You can bet on it. Really successful on Limitless. But what's in there? You can see the constituents, a number of different companies: AESA, BitTensor, Render, Akash, Grass, and Echelon Prime. And here you can see the breakdown: 25% heavy on the top three, and then 8, 11, and 5. So all of that made available for you to have a look. You can see the fact sheet, how it's all calculated. You can download the docs if you want to do it in your own pace, and then you can trade it over here. We're getting more on the predictions. That's all coming soon. Anyway, just some background there. Talked about the IEA over there. Yeah, and what have we also been doing, right? I mean, You've seen in my previous presentations where we have talked about um, the ability to leverage Truflation to be able to predict and get leading economic indicators that you can trade on, right? What are trading signals that you can develop? So the team have been working heavily on identifying trading signals with Truflation and the price of Bitcoin. So here you can see some of these details. It's coming out in a detailed report for those of you that are subscribers. If you're not subscribers, you'll just have to wait till we publish it. We've already published something in the blog post, but here we're actually giving you some ideas and strategies on what you can do. And by the way, Truflation is launching a vehicle that allows everybody to participate in this strategy. We will be actually building a Bitcoin treasury strategy leveraging this Truth real-time index that we've developed. So here you can see the detailed performance associated with that, when to buy, when to hold, what has the performance been in each of those buys as it then hold, and maybe we sold at the time to drive the dip and then get some positive elements on the upside. But if you look each time, a 26% gain between the 28th of September and the 10th of October, between the 29th of October and the 13th of November, right? So all of a sudden you're making 20% gains within those short window periods of time as Truflation shifts in those periods as well. So look at the shifts, big drops in Truflation, 24%, 12%, 25%, 43%, 59%, driving us 40% upside in the investment during a period, obviously slightly longer, right? You're looking at January through to April. So that's sort of what we're seeing. We'll be sharing a lot more around this and how you can use trading signals. We talked about it in the past, using Truflation as trading signals. Who is using them? What are some of the entities out there and the research houses that are taking advantage of this and have figured out the model and working with these models to identify? We've got something around the Dixie coming. We've got the 10-year bond, something coming there. I've already showed and indicated that to you in previous slides. And if you like it, let me know, and we can do more around that. Yeah, so here was, anyway, that's sort of what we've been developing and working on. I just wanted, as a round, especially related to Bitcoin, I want to give a shout out to Anthony Pompliano, who launched his ProCap BTC, which is an LLC buying Bitcoin. And he just announced a $1 billion merger and over $750 million in funds that they raised to invest in Bitcoin. And within 1 hour of that announcement, they already invested in one Bitcoin, and they bought at 103,785 was the price they bought. Yeah, Bitcoin is the new hurdle rate. We've been talking about a lot, and you can see how we have actually taken advantage of that hurdle rate and what that means. And I don't know if you've seen our Bitcoin purchasing price index right here. We've actually built and modeled a whole index based on the Bitcoin. So here you can see one Bitcoin buys you 160 baskets associated with commodities. What does that look like, right? And so here you can read about it. You can get, where are we getting all the pricing information from? But here, what's in there? So we have all the world's commodities, and this is going to get updated because it's not visually, and I shouting again in public to the team to actually get this updated as we talked about. Crude oil, 48%. Why? Because from a world consumption perspective, where is the world spending their money in terms of feeding the population, feeding their factories, generating GDP? What does the world need? According to the World Bank, we copied the pink sheet and we have built out the global index, and we've priced it not in dollars, but we priced it in Bitcoin. So here, 48% of the basket is in oil. Then you've got lithium, which is metals. You've got natural gas, again, energy. So we have energy, we have commodities, we have metals, and we have precious metals that blend together and build out this index that you can track in dollar terms or in Bitcoin terms, right? And this is some we have to get much better at the wording here, and we've done that. But now you can actually come here and find out what is in here, how it's calculated, and the fact sheets haven't been updated. So I'm actually preempting everything. Can we see something here? Yeah, there's the fact sheet where you can actually try and have a look at it. What the real world benchmarking, commodity weighted methodology, BTC denominated analysis, robust pricing, annual rebalancing based on market intelligence, base normalization, blah, blah, blah. So you've got all of these benefits and how it's calculated, how it's performing. And here you can see how the average number of baskets that have been used to purchase a lot of these details. But yeah, so that's really what we've put together. You can't see that. I didn't share that with you. Damn it. Sorry. But anyway, that's a big thing that we've been working on, and sort of digressing from our friend Anthony, who launched his treasury. So congratulations. He's been a big supporter of Truflation right from the beginning when we launched during COVID. And yeah, we had so really good. And if you haven't seen the podcast, go check out our podcast. I just did one with him. I've done a number with him on his show. He came on and joined our show, and really, yeah, super excited about his latest release. So congratulations over there. Definitely do. But we've been building and making a lot of this data available. So how do we allow anybody to come in and access better data so that you can calculate and do your assumptions? Not only that, all of these indexes that we're creating are becoming tradable, right? So Truflation has been an index creator, developing a lot of these indexes, is over here in the Web3 world, as you can see, Web2 world, selling to traditional institutions, working with companies like ARK Invest, Goldman Sachs, Morgan Stanley, Scotiabank, GMI, Bank of America, all where analysts at these teams are working with the Truflation data or using the Truflation data to do their own predictions and try and find trading signals for the assets. So not only are they using it for Bitcoin, as you've seen in previous slides, they're using it for other indicators and being able to find trading signals associated with that. Obviously, Chainlink, big partner of ours. We're glad to be working with Chainlink. We are providing them with interesting insights and indexes that they can use with their clients. Same with Pith. They're looking to use indexes over there. Not yet, but maybe in the future. Who knows? We're working with them to identify opportunities. But right now, we've got indexed up fund on Solana and Sonic. We've got Cultured on Plume, also Nexus on Plume, which is a big data storage solution on the Plume network. We've got Overlay on Arbitrum. You can see all the entities that are beginning to use it. We believe there's going to be a huge growth in prediction markets. So we talked about the stablecoin, the Genius Act, 2 trillion in 2 years, and that was back in March before anybody even knew that this Genius Act was coming, and how genius that is. Not only the naming of it, but actually the marketing of it, and how the dollar is going to dominate. And as a result out of that, and thanks to its digital flexibility and the big domain name out there. It was interesting. There was a really interesting interview with Paolo Arduino, who is the the CEO of Tether. And he was talking about how they sort of looked at GBP, the pound, being a more important global currency than actually the euro. So that was a really interesting insight to me. Obviously, the pound has spread around globally, thanks to largely its global presence in the past, and a lot of countries realizing and knowing the GBP over other currencies versus the euro. And so That was interesting. And so we just wrote another, I just wrote another market, a blog post, not only about the Genius Act this time, but more about the growth in prediction markets, right? We really think that that is going to really make a significant difference, right? The rise of prediction markets and the need for reliable data. That is what the Truth Network is really about. How do you get certified data sets that you can work with and really easily integrate? And that's what the Truth Network does. And here we go into the prediction markets, we look at how they work, what are they important for, how big this is going to be, what are they? They are the precursor for futures market. It is allowing everybody to get educated and get up to speed on this new opportunity around futures. I can buy binary futures. That's all it is, a bit of up and a bit of down. That's what prediction markets do. I learn about binary options. Okay, now I want timed binary options. So I want to know, will it be up or down at some point in time? Or can I buy a contract that says, yes, it will be up in the future at that point in time? That's why companies like Limitless, like Cultured, like Index.fun are going to be really interesting in terms of identifying opportunities and giving you financial information that you can trade on in other areas as well, as we all do with inflation numbers, with Polymarket, with other forecasts that we try to do. Instead of getting a poll, you actually have skin in the game and people can see it. But here you see the market size, right? Trading volume on prediction markets right now over the last 365, it's been some 15 billion dollar. No, that's not BetSwirl. We actually, this is all on chain, so we can't see Kalshi because they're a private company. They don't disclose this stuff. Maybe we should be criticizing, why do private companies not disclose their data? All of this data is already available on chain. So I think every single institution should be publishing their financials. Why? That is safe. Not the central banks, not the governments. They don't know how to spend. They don't want transparency. They want to keep it all murky, as we learned through the Doge experience. So how do we now actually get the same kind of transparency that we see here? Anyway, we try to publish it, and we just believe that this is going to be a huge market, and that's where the Truth Network is really undervalued today and really represents a great opportunity for everybody to be able to participate in. So check out the slides, read the blog post. We just posted it, and you can see who's building on Truth and using the Truth to get certified data. And why do people like it? They really like it because it's super easy. It's a decentralized database. It's using SQL. We have SQL smart contracts. It's using PostgreSQL. You've got commands and features that you can use right directly from your command terminal right into the Truth Network. You pay to write, you pay to read. And no, you don't pay to read. Everybody can read, but you can pay to get certification around that. Otherwise, what do you need to do? Look how complicated it is, how it's done today. Read off-chain data. You need an adapter, a piece of middleware, as we saw in the announcement between MasterCard and Chainlink, our partner, right? Or you need to use the graph or Subscript, which is really about capturing on-chain data. You take it off-chain, you compute with that, and then you add it into your application, and then you write again back to the blockchain. Man, how many steps? Look at all the different programming languages you need to do. Now, all of a sudden, all developers have worked with SQL. Everybody needs to integrate with it backend. And PostgreSQL is the biggest of the lot. And that's why we've really built this out using PostgreSQL. And that's why we did the Quill acquisition announcement that we shared with the other day or the other month. Can't remember when it was. But these days just go by so fast, and we are trying to do so much. Yeah, and so right now, going to sort of more pertinent news, what's coming up in the future, right? Where can we start looking into the future? As you know, we always think 45 days ahead because Truflation already is an indicator 45 days ahead. Right now, we have Mr. Powell in the hearing, so you can see him over here. He's being grilled with questions and answers, to save you the pain.
Being tariffed, they'll find other ways to do it.
He's talking about sort of same stuff he said after at the press conference. That's his opening speech. Now he's getting grilled on questions. People are asking, why are you not dropping rates? Why are you not dropping rates? Why are you not dropping rates? Will you drop rates? We all know that Waller came out and talked about rates and said that they would likely do it in July. I think the pressure is growing on the FOMC, and of course, of which Powell is the director. So he's the main voice or the spokesperson for that FOMC meeting. And let's see what they come out with. Dot plot, I don't know, man. That just means nothing. To me, what's happening with the Federal Reserve, given the Genius Act and the OCC, they are going to become less and less relevant. There's a big refinancing needed. We all know that there's 9 trillion or 6 trillion or 7 trillion, depending who you talk to, but it's in the trillions. And it's just such a big number that I think any ordinary person just can't fathom. That needs to be refinanced. Will it be refinanced with the digital dollar that's going to go into market with the Genius Act? As we've already heard, everybody is going to start minting their own stablecoin to save billions of fees that they have to pay right now to the credit card companies, to their banking, and they have to wait 3 days for settlement. So just imagine that acceleration in cash flow. What does that mean? How will that money be deployed? What kind of investments are going to be made? Super interesting, really exciting, and I think something to watch out for. But yeah, what is all of this saying, right? So we've got his presentation after the FOMC decision not to raise interest rates. They've got another one coming up in July. And then they have summer holidays. So there's nothing until September. So based on that, though, what's he saying? Are the markets changing? And we can see here inflation. Where's inflation going? Right now, the market thinks inflation's going to go up 2 basis points, 20 basis points, sorry. So that's to 2.6. The BLS is up at 2.4. We all know what Truflation is saying. And if you don't, Truflation's up at 2.16%, constantly growing. And guess what? Truflation is on the uptrend and we're 45 days ahead, right? And so here it started really around the May timeframe. We sort of bottomed really here, but hovered around here. And you can see down here, we started about 1.35, and then it's been a constant climb. Bit of a drop here, and then a bit of a constant climb. You can see why these drops happen, but again, we track it every single day. So you're going to see fluctuations in the daily movement. But yeah, it's going up, clearly moving upwards. So what does that mean? Did you buy Bitcoin when it was down at 1.3? We suggested, and we did a transaction around that according to our spreadsheet. What we did, why? Because we saw a significant uptrend. We're getting to the summer vacations. A lot of people staycations, the new name. Let's see if people actually do stay on staycation. But again, the market is anticipating a growth in interest rate. What does that mean? Despite his words and the rhetoric, Waller, he always talks, even here, he's talking about 2%, the benchmark, the hurdle. He wants to bring inflation down to the 2% metric. He still talks about employment pretty high. Listening to this, you sort of get the feel that he's not going to, his vote is not going to be towards dropping, as in Powell's vote on the FOMC is not going to be towards dropping interest rates. So it's going to be an overpowering vote from other members that's going to have to drive that. And you can see that's reflected with he's using data. He doesn't actually go into exactly what data he's using. He should be using Truflation data and on the Truth Network, which we know, and we've written an article and many of articles around that. But here you can see, everybody's anticipating a price go up. What does that mean for interest rates? What are people saying around interest rates? It's improved, right? We were up here on the June 19th. We were up at 93% no change, and that's come down to about an 79% now. So still only 2% thinking that there's going to be a 50 basis point or more drop. Again, what's the amount? 100. So I put some money into this just for fun, and you can see, I can tell you, I was getting 7,500 back, or 750,000 back, $750 back, and now you only get $500. So that's a 250 gain in that period of time. So interesting how things pan out. And yeah, that's where that is. What is the Fed saying? The Fed watch on the CME group also saying about 80%. So if you remember here, we were about 79% back at Poly Markets. You can see here, we're talking about 79%, which is exactly the same as over here, what the Fed watch is saying, 79.3%. Are not expecting a change. But here it's a bit higher, right? Not only 2%, but this is a 25 bips drop, not a here 0% are saying a greater drop than that. The only reason why I'd go 50 is because remember in September last year, he did a surprise drop. The FOMC decided on a surprise drop, and that was 50 basis points. And given the fact that Europe and UK and Switzerland's now dropped into negative interest rates or zero interest rates in Switzerland. So we have ZERP again in Switzerland. What does that mean? And Switzerland's always a safe haven currency, right? People want to go there. So ultimately, ZERP in Europe, ECB, she just had her announcement yesterday, so you can see that. And the great thing, look at that, Europe's beginning to speak in English, one language. We've been talking about that. I don't know if you saw my podcasts in the past, but we talked about English becoming the unifying language for Europe. You can have your local languages, keep the cultures. We love the local cultures, but just have one language. Everybody can communicate with it. Everybody can be documented in the same language. People can understand each other. We can understand the different cultures. That's really important in one language. That'd be great. Anyway, so she's speaking in English, number one. Then she goes on and talks about the economic situation. Europe's already dropped interest rates a number of times. They've got to kickstart the economy. And what she's arguing is that Europe needs to unite, invest in defense, invest in, I don't know, all this other stuff, use people's pension money to unite them so we can actually invest and reinvest in the country, in the economies. But it really sounds like, if you listen to this podcast, that she's talking about big investments, right? Big companies. I don't know about innovation and stuff like that, because that's definitely not happening. But then she goes into the second half of the show. She starts talking about stable coins, the euro dollar, central banks, and she talks about how the volatility can really harm investors. It's really about hurting everybody. But by the way, everything's regulated. You need to be in Europe. You've got the travel rule. You can't invest. You've already got to go through a KYC. You've got to go through know your investment strategy. You've got to get validated that you are a credible, knowledgeable investor. You know the risks you're taking. So all of that's already in place, but still they're really scared about cryptocurrencies and the adoption of that. And she's really trying to justify how to protect the European Central Bank and their digital dollar or euro plans, because everybody else is going away from euros. And by the way, on a couple of exchanges, you can't even trade USDT anymore. They only have USDC. Why? Because they're not MiCA compliant, and so they'd be taken off the centralized exchanges so that are in Europe. So that's really something that they're just regulating. And I think one of the things that everybody's talking about is moving away from that regulation. Sorry, I didn't change this. Check this video out. You can watch it right here. It's about, I don't know how long.
The Governing Council decided to lower the key interest rates again.
So she's trying to lower interest rates again. And then she goes on. I mean, you can read. I'm not going to watch this. I don't have the time. But yeah, check it out.
Let me now turn to the second topic, which is new forms of digital assets, including stable coins and other crypto assets.
So she's saying how it went from a $200 billion to a $2 trillion asset class, which is pretty cool. But yeah, I mean, just that these things, what these guys do, right? GDPR, remember those GDPR? I mean, if you can see that, GDPR was one of their famous regulations. They did the MiCA. And so here, after 7 years, they've learned that, oops, maybe we should cut this. So they're trying to kill it. It still isn't killed. By the way, this was back in April. So they talk about it in April. We're now in June? No action. All the websites still have these stupid pop-ups, click-ups, and it's costing hundreds and billions of dollars of site. GDPR regulation for successful apps took effect. Boom, traffic down. People don't use it. The GDPR effect, how data privacy shaped firms' performance globally. The findings show companies exposed to the new regs saw an 8% reduction in profits and a 2% deduction in sales. So really, bang, going down, suing everybody, really bad. The cost of GDPR compliance, $7.8 billion spent by Fortune 500 companies. Now imagine you're a startup How do you deal with that? I mean, it's insane, right? And so, anyway, they go. I mean, Ole, and then all of a sudden, GDPR, red tape. He put a really interesting post together in terms of how much it cost. America innovates, and that's really what's the sad thing. The people working hard, trying to innovate in Europe, right? There are lots of innovators. Ole himself, right? You've got Peter Levels, all crazy, all trying to drive, accelerate Europe, right? We've got brain powers, the innovators, the educational element is suffering because of this regulation. That Europe is suffering a huge brain drain. Look at the UK. They had 10 million entrepreneurs, 10,000 entrepreneurs leave in 1 year, all millionaires and leaving. That's loss in tax income. That's loss in jobs created. That's losses in so many other things in terms of furtherment, future GDP growth, right? Um, yeah, anyway, and Europe's going through the same thing. And then you have this Brioni guys talking about Europe should come together and we should do all the great thing, right? And so built in Europe, we love that. But at the moment, Europe is the fucking laughing stock around the world. Excuse my language. I know this is I don't know if I said adult friendly or not, but anyway, it really has become the laughing stock because of people like these that are just bureaucrats sitting in an office, never worked a job, have no idea, professional bureaucrats worried about their own personal ego versus worrying about the betterment of Europe and actually being able to stand up proud and strong and lean in and act as though you're wearing a fucking cape and you're out there hustling and really building and creating. So, and look at some of the ways that these laws work. They don't work at all. Look at this. I have to show you this. About a minute long. This is what that happens when you overregulate and crazily regulate and think you've got it
How
in
can
control.
luxury brands print made in Italy? It's illegal, right? Now, you see, this EU law says that I'm allowed to say made in Italy if less substantial transformation is done here in Italy. So I have imported this bag from China. It cost me $20. But here in Italy, I will just stitch this zipper, which is legally the last substantial transformation. And now this bag is suddenly made in Italy. And I will sell it to you for $2,000. Because now imagine it was handcrafted by Italian artisans sipping Prosecco under the Mediterranean sun. The irony is that the Chinese artisans are now way more skilled than Italian or any European ones, but they don't drink Prosecco. Oh,
Yeah, and so that's the big problem that the rest of the world is struggling, right? And I just get tired. Here, there was another podcast, a really good one actually. It's 2 hours long, so you got to do it in a drive or in a gym or in a sauna or when you're. But it's really good. Or listen to it at 2x speed, which is sort of what I do. But really good insights. But what I get upset about is they're all complaining, China, 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 China stealing our jobs, and we gave you the world negotiated with China. They gave away the negotiation table. There was incompetence at the table. And at the time, I mean, fair enough. There was it's a really good insight, which I think you should also watch, which is another one on China, which is the head of, I was in China when he was there as well, by the way, Steven Sinofsky. He is now at A16Z. This is a really good problem. And he really goes into detail in terms of understanding and sharing his insights in China. He was running Microsoft at the time, trying to fight the patent copies associated with the Microsoft software. But ultimately, we at the rest of the world was pushing everything to China. We were pushing all our manufacturing there. Why? Because we saw at the time it was the right thing to do. But ultimately, it took, and this also comes out of the two podcasts, it sort of took out the it was a huge drain in resources and talent, the manufacturing talent. And there they go and show what China has really learned. That artisan skill that handbag maker was sharing with us has moved and transferred out. And we don't want to do that work anymore. So we have to find new works to do. And what is the new work? In my view, it's around AI. We have to build our competency in the next generation of manufacturing. And the next generation of manufacturing is not going to be sewing and doing last substance work. It's going to be having robots drive a lot of the work for us, programming those robots, promoting those robots, and we're going to create a whole new set of jobs. There's a really good call. I'll talk about it on Jansen's law, which talks about how new technology creates all these new jobs. And they've done studies over time where everybody was scared. We're going to lose our job. We're going to lose our job. But now all of a sudden there's this new law, and let's dissect it. Let's look at it. Is it real? Is it something we're going to watch? Is it something that's going to be actually taking place and we'll be able to follow? Or will we just need a new sense of purpose? That's really what drives the human race. And as humans, that's what we want. But I'm just sort of showing this as to why everybody thinks, China's we've just stolen our jobs. They've actually taken them, built on them, and we relied heavily on them. It's our incompetency, that bureaucratic middle class government roles that are incompetent in actually negotiating and doing good deals. And that's really my strong view right now. But there's so much talent. There are lots of entrepreneurs. There are smart people that go to university, that study, that are engineers across Europe. Let's keep them here. Let's make a framework and a country and environments where entrepreneurs can thrive and really build and scale. That's really what we need. And, we're seeing that change take place right now in the US. Look at the momentum, the energy that's being created in the technology space. Why? Technology is the future. That cat is out of the bag. Don't try and stop it. Don't block it. Let's let it rip. We had crypto. Everybody can be a part of crypto. Everybody is learning by being crypto. We're not dumb. We're smart. Let us go and learn and make our lessons in crypto. Set the guardrails. Set a simple, lightweight framework and let it be enforced at a local level, not at a central, detached from reality, big hub like in a place called Brussels or Washington, D.C. We want it on a local level where we know when our tax dollar gets paid, it actually goes to something relevant to me in the fiat world, whereas in the digital world, I have a global playing field. That's what we need, and that's what we want. China is innovating. We all know that. Look at their EV sales. They just broke through the total US vehicle sales in China alone, right? So national China EV sales is greater than the total US car market. So that's just something to digest. And that industry's grown look at that. I mean, from the last 20 years. And if you watched my podcast the other day, or the AMA, if you joined in, you will have heard on terms of what the elevation is. Number one, salary increases, number of employees at BYD that have come out of that, and the car, how that has evolved from a basic car to all of a sudden now a luxury environment. Why is this so important? Because we've created the EV index where you can come in and invest not in the car companies, which you can go and buy yourself. You can buy BYD. You can get soon tokenized assets on Kraken using Backed to be able to trade these tokens or shares backed by shares, tokens backed by shares, or with Sailing Protocol. Stay tuned. We might have an announcement there. But yeah, so you can see here, it's backed by the raw materials, the commodities that you can actually go and see. Here are some of the commodities. What's the weighting? Copper. These are all commodities needed inside EV cars. And it's broken down based on the shipping of those cars, the sales volume associated with this car. So check it out. That's why we always look at EV cars. And if you still think the Chinese aren't innovating, remember this. We were talking about California, the big topic du jour right now, Wednesday, June. We gave $7 billion to California for a high-speed rail line, and no track was ever laid. Trains to nowhere. San Diego Link was passed as a ballot back in 2008 and was supposed to run for 800 miles, and they have nothing to show. And guess what happens in the meantime in China? Boom, right? The sound barrier. I mean, look at this slick train. Does this not look cool? I mean, look at that, man. That looks pretty cool, eh?
A train just broke the sound barrier of ground transportation. China's new maglev can hit 620 miles per hour. That's faster than a Boeing 737 at takeoff. While the rest of the world argues about electric cars, China built a train that makes airplanes look slow. But here's what nobody's talking about. This technology might not even be Chinese. And the real story behind this machine could change how every country thinks about the future of travel. Most people think trains are slow, heavy metal boxes rolling on metal tracks. But China just shattered that idea completely. Their new maglev prototype hit 387 miles per hour in testing. The final version is designed for 620 miles per hour in a vacuum tube. To put this in perspective, a commercial airplane cruises at around 550 miles per hour. This train would be faster than flying. The technology works through magnetic levitation.
Anyway, you can watch that video, China new train faster. But I mean, ultimately, yeah, look at that speed, the trial's going. They did a trial, they launched a trial on maglev, not on anything else, and it's going to replace planes. It's faster. Why does that matter? Speed of transportation accelerates the, brings a nation closer together faster, right? So right now, if you want to drive somewhere, it's going to take you 8 hours. I get on a maglev. I don't need to go to an airport, go through security checks. Maybe you have security checks here, but you get straight downtown in the city center. Bang, you have a station, and it's amazing. I mean, if any of you have taken the maglev train between Pudong Airport in Shanghai down to downtown Shanghai, it's got its own station down there. Boom, it's like in 5 minutes. You take a car, man, it's like an hour. And so ultimately, you're just closer to your destination much faster, and that increases economic productivity. All of this increases economic productivity. And so that's really important to see. And on that note, I don't really have anything else to talk about. Hope you enjoyed this. It's pretty long. Sorry about that, guys. It's 50 minutes, way too long. But yeah, I just wanted to share all of that with you. Lots happened over the weekend. We're doing a lot. We're continuing to build a lot. So check out Truth Network, and we'll see you back here on Thursday. Thank you, everybody. Have a great day, and talk to you later. Bye for now.